on the Federal Home Loan Bank of Pittsburgh's Affordable Housing Program. Before we get started, we want to provide you with some logistical information. Please make sure you get online while we talk so you can access the visual component. If you should have received an email from me this morning with instructions, and they're also in the calendar invite. We will be recording today's webinar, and we'll send that out after the webinar today in addition to the PowerPoint presentation. First, click the ReadyTalk link, enter your name, email address, and click register, and you will be given access to the meeting. If you have any questions throughout the presentation, please type them in using the chat feature in the lower left-hand screen. We will also open up the line for discussion at the end of the webinar and make sure all questions that are asked are addressed. It's my pleasure to introduce Megan Kreider from the Federal Home Loan Bank of Pittsburgh. She's a graduate of Carnegie Mellon University's Heinz College with a master's in public management. Megan joined the Federal Home Loan Bank of Pittsburgh in 2013 and now serves as the Affordable Housing Program Product Manager. She completes monitoring for AHP programs and serves as the administrator for Blueprint Communities. Megan's previous experience includes community outreach for youth in foster care, homeless prevention, and rapid rehousing, and working as a housing case manager for homeless former foster youth. It's my pleasure to introduce Megan. Megan?
Great, thank you. So thanks everybody for joining the call and learning about AHP. As Joy said, I'm with the Federal Home Loan Bank. I work in the Community Investment Department here. Before I get started, I want to just talk a little bit about the community investment products that are offered here by the bank. And the focus today is, of course, on AHP, but it's just one of the 5 community investment products that are available. So it's important to note that these products are only available through our member institutions, but they're still incredibly valuable resources that are provided to our member that are then passed on to you and the community. So I encourage you to explore each of these. If you haven't heard of them or aren't familiar with them, you could visit our webpage, www.fhlb-pgh.com. And if you'd like to talk about any more of them in any detail, feel free to contact Laura Rye or Dave Bucas as indicated on the slide. So with that, I'll get started on AHP. Again, I really appreciate the time you're taking to learn about the Affordable Housing Program and how it can potentially be used to support affordable housing in your community. So today I plan to provide you with an overview of AHP. Again, I really encourage you to check out our website to find out a lot more information, helpful resources, and even additional webinars as they become available. So on April 12th, we'll be releasing an AHP 101 webinar, which is an extended version of this one, and it provides a lot of great detail, particularly as it relates to scoring and feasibility of the AHP applications. Let's just start off by talking about what AHP is. I'm sure there's some folks on the call who may be very familiar, some may have heard of it but aren't too sure, and some this may be your first time. So a lot of you on the call today are tied to affordable housing in one way or the other, and I think we can all agree that housing, and particularly affordable housing, is an incredibly important factor in local community growth and stability. So what AHP is it's a flexible source of subsidy for affordable housing projects, and you can use it with a conjunction of a variety of other financing structures like a gap source, or we can be considered a primary source depending upon the type and scale of the project you're considering. I know you all know the importance of housing, but as you're promoting your project in your community, I hope you're also highlighting that it's not only the creation of physical units but you're also talking about the spin-off benefits that housing can generate for communities. So because AHP is a flexible financing source, it really can be used to support a variety of housing project types, which I'll talk more about later. And because of this flexibility, it allows you as a developer to effectively address local housing needs relevant to your particular area. Whenever we talk about AHP, we always like to highlight real projects that were awarded AHP funds. So it brings the program to life for us, and we love to see that cooperation that's happening between our bank members and project sponsors and all of the great work that's being completed in communities. So in this example, 6 new construction homes now grace an area that was targeted as an eyesore of vacant, blighted properties in the Point Breeze neighborhood of South Philadelphia. This project represents the largest home building project ever for a sponsor, Habitat Philadelphia, at the time. And the project received an AHP grant from us in the amount of $123,499, and they partnered with our member Santander Bank. So the newest homeowners pictured here, they devoted more than 350 hours of sweat equity in lieu of a down payment. They had shown a need for housing, and they also had the financial stability to repay a 0% interest 30-year mortgage. So before I jump into the presentation, I just want to briefly review the agenda. We'll start with a quick overview of some of the basic elements of AHP and then cover a step-by-step process. I'll highlight how you register for AHP. We'll talk about the main components of scoring and feasibility. We'll briefly discuss what happens after a grant is awarded, and then we could open up the line for those questions. So if you have any project-specific questions, this isn't really the best forum to do so. I recommend that you email me or give me a call and we could talk about that. So if you have any general AHP questions, that's what I'd be happy to talk with you about today. So when we talk about the AHP process, it starts with really further defining what it is. So in 1989, Congress mandated that all of the home loan banks, there's 11 throughout the country, that we must establish a fund, or AHP, with 10% of our annual net earnings. So this year, we will have about $23 million available to projects. So these funds, we provide them in the form of a competitive grant or a low-cost advance up to $650,000 per project. But all of it must support affordable housing development. We really only see requests for the competitive grant, and a lot of projects request various amounts of subsidy. It really depends on what the need of the project is. Federal Home Loan Bank of Pittsburgh members, we call them the applicant. They must partner with a developer, who we call a sponsor, to submit an AHP application for review. So sponsors on the phone, developers on the phone, you cannot access these funds without a member's support. There are several types of projects that can be competitive for funding. We see it all. We see small rental projects, large rental, lease purchase deals, for sale housing, both new construction, rehabilitation, or even a combination of the two. We also have been seeing a lot of owner-occupied projects, owner-occupied rehabilitation projects as well, and all of these types can be competitive for funding. AHP has an income requirement for all projects that they must meet, and these projects must serve the target population, which is households with incomes at or below 80% of the area median income. On the right-hand side of the slide under income requirements, you'll see that the income ranges vary depending upon where the project is being built. So for example, if you're building a project in Pittsburgh, a family of 4 can earn just under $57,000 and still be eligible for housing under AHP. But when you compare that to a family of 4 in Philadelphia, a family of 4 can be eligible for housing if their income is at or below $64,250. So there's a number of threshold eligibility requirements that you'll have to consider if you're considering developing an AHP application. So the first requirement, again, addresses that income of households I was referring to, and there's specific target thresholds that you'll note there's a difference between rental versus owner-occupied projects. AHP funding is also subject to retention requirements. So if you're thinking about a rental project, that's 15 years, and for homeownership projects, it's 5 years. Those retention requirements, they set the period of time which the project is expected to maintain affordability, and during that time the project will also be subject to certain compliance requirements, monitoring, and reporting. All projects must meet fair housing. As I mentioned earlier, the maximum amount of subsidy that can be requested per project is $650,000. And any AHP funds that are requested, they have to be used for an eligible purpose. We define eligible purpose as new construction costs, rehabilitation, or acquisition costs. Now, there's a lot of moving parts to the application review process, but from a higher level, it can be broken down into 2 major components, and they're scoring and feasibility. A project needs to score both competitively and meet feasibility requirements. So for the details on these two components, I really highly recommend, and just do it, refer you to our implementation plan, which is available on our website. This plan is our guiding policy document, and in order to be successful, you have to read this cover to cover, truly digest what it's telling you. There are so many applications that we see that lose points simply because they didn't take time to read the application and follow, or the implementation plan and follow it to a T. Our scoring system is based on a maximum of 100 points, and it's important to note you don't necessarily need to score 100 to be competitive. Really, none of the projects in the past several rounds scored 100. In 2016, the highest that scored was 76 points. So as you're considering whether or not to submit a project to us, you should really try and determine what your potential score is to see if it will be competitive. There's 11 scoring categories that prioritize the applications, and these scoring categories reflect the priorities of the Home Loan Bank, and we determine that based on periodic assessments of housing needs within our 3-state district, and even consultation with our Affordable Housing Advisory Council. As far as feasibility goes, I'll cover that a little bit later in the webinar. This slide further lists the components of AHP. I already mentioned scoring and feasibility, but for those projects awarded funding, there is a process for disbursement of funds, and all projects are definitely subject to compliance and monitoring. We have a webinar on our website that's specific to disbursement and monitoring that I recommend you review as well. So before I get into kind of the step-by-steps of AHP, I want to take a close look at another example of an AHP project that's incredibly different from that Habitat project I mentioned earlier. And it just goes to show that all different types can be competitive. So this project is JBJ Soul Homes, and it's a rental new construction project. Project Home, the project sponsor, they partnered with the member applicant, PNC, for a $250,000 AHP grant back in 2010. So with a total development cost of $13.9 million, the project incorporated tax credit financing from the City of Philadelphia, and financing from the sponsor in addition to the AHP funding. This is a mixed-use development that includes retail offices on the first floor and 55 apartments on the upper floors to formerly homeless and low-income individuals with access to much-needed supportive services. Okay, so now that you're getting more familiar with AHP, let's talk about the application process. So if you break it down, the AHP application process, there's really 3 critical steps: review, partner, and prepare. And within each of those steps, there's important actions that we think need to be considered to ensure not only a complete application, but truly a competitive one as well. The first step is the review step, and it's all about due diligence. Based on that due diligence, establishing really a plan of attack to bring all of those moving parts together by the August 10th deadline. So in this review step, that implementation plan I mentioned earlier is absolutely critical. It's the starting point. Absolutely everything that you do needs to flow from the implementation plan. Our application is an online application. It will open for input on June 6th. But you don't have to wait until the application opens on June 6th to really start completing the forms. All of the forms, there's a lot of them, they will be available online at the end of March. We can also provide project-based technical assistance upon request. You can find the request form now online, and this option is particularly valuable for those who are submitting for the first time, or maybe you submitted last year and your application wasn't successful. We can talk through your project with you. So we'll talk about scoring and feasibility issues and clarifications specifically related to your project. Also, right now, you can register online in our system to get your own unique user ID and password so that you're ready to go when June 6th comes. There's a demonstration online that can help you with registering yourself in the system, and I'll cover registration just for a second on this next slide here. So if you're new to the AHP online system, what you want to do is, as a sponsor only, so if there happen to be any members on the line, you don't do this process. But as a sponsor, you will go to our new website, and there's on the top right-hand corner, there's the Bank for Bank link. This link brings you to the login page. And on that page, on the bottom right-hand side where the red arrow is pointing, it says click new, or click here to register as a sponsor. So then the system guides you through a process to register, to either create or attach yourself to an existing organization. If there are any consultants on the line, you want to attach yourself to your consulting agency. Do not attach yourself to the organization that's hiring you to help with the application. It gets very messy, so make sure that you take my words into consideration. Also, all registrants should make sure that you only register yourself once. We have, again, a video online that demonstrates how to register yourself, but if you have any questions at all, please give us a call. Members, if you're talking with your member, any members on the phone, there's a different process for accessing AHP online from the sponsors. So again, sponsors, if you're working with a member who is unsure if you have access, just let them know the process is different and to contact us, and we can help them get registered if they don't already have access. So if you're familiar with AHP, you'll know that the application process is a lengthy one. The round opens on June 6th, which allows you to begin inputting the information into the AHP online system. And all pages of that system must be fully completed, all of your documents attached. It must be sponsor approved and then member approved by Thursday, August 10th at 5 p.m. to be considered accepted by the bank. The system actually shuts down at this point, so there's no possibility of extension. We can't stress enough how important it is to initiate your application early and start the process, especially if it's your first time applying. I want to move into some specifics of the last funding round. So each year, AHP funding round, it's always extremely competitive, and 2016 was no exception. We had 164 applications that were submitted, vying for the $23.1 million in available subsidy. We were able to approve 50 projects. The highest score was 76, and the last approved score was a 63. Now, it's important to note that that last approved score, it can vary year to year. This slide and the next one outlines the scoring categories the bank established based on our district, which is Pennsylvania, Delaware, and West Virginia, and their housing priorities. On the right-hand side, under point allocation, you'll see that each scoring category has either a fixed or variable point allocation. The fixed categories receive an all or nothing score, and for the variable categories, a range of points may be awarded depending upon how the application meets those priorities within that category. Our implementation plan explains these categories in great detail. It's not enough to just say, yes, we have donated property, but the application process requires sufficient documentation to support the claim you're making. So during our review, we don't look up anything. We don't look up anything at all to verify your claim. We only look at what you provide to us. So I can't stress enough how critical documentation is. There are so many projects that score high at first, but they lose points due to poor documentation. We see projects drop as many as 20 points just due to documentation. So on April 12th, as I had said, on our website, we will have a link to the AHP 101 webinar that will go over these categories in great detail. But for this webinar, I'm just going to touch on a couple of them. This next slide lists the final categories. So again, make sure you read that implementation plan for details on our scoring priorities, but also how your project compares to our feasibility guidelines. You'll want to take a look at how your project is matching up with the scores to determine if you'll be competitive, keeping in mind that the last year's funded application was 63 points. But again, it can range and fluctuate a bit year to year. So there's just, again, a few categories I want to review. We have established housing for the homeless as an important housing priority. So housing for the homeless is a 6-point variable category, meaning those projects that reserve units for the homeless are awarded a higher score. Projects that reserve 50% or more of their total units for households who are homeless will receive 6 points. And projects that reserve at a minimum of 20% of their units to less than 50% of their units for homeless will receive 3 points. If there's any project that reserves less than 20% of their units for homeless households, it will not have met the threshold and you won't receive any points for this category. Our definition of homelessness is shown here on this slide, and you may note that our definition is a bit broader than the standard definition used by HUD. So transitional housing projects, excluding overnight shelters, you may be eligible for scoring points as long as you're meeting the minimum 6-month occupancy requirement outlined in our implementation plan. The special needs category is listed here on this slide, and like housing for the homeless, it's a variable scoring category of up to 8 points, and it's considered a priority housing need by the Home Loan Bank of Pittsburgh. So similar to homeless, it's this project that sets aside at least 20% of the total units, but less than 50% with a household member, at least one, with an individual with special needs. They will be awarded 4 points. So this doesn't have to be head of household. It just needs to be somebody residing in the home. For those projects that reserve 50% or more of total units for individuals with special needs, you will receive the full 8 points. So our definition of eligible populations with special needs is on the left-hand side of the slide. And in the application, when you're completing it, we want to know how you will demonstrate that that individual or that is in fact have special needs for that tenant or home buyer, but we don't require the documentation up front at application. With our community stability category, in 2016, we had changed points allotted to owner-occupied rehabilitation projects. So these projects may receive 5 or 10 points, depending upon the type of work and the percentage of units that's meeting a threshold. So if you're an owner-occupied rehab project, to receive 10 points, the sponsor must commit to at least 75% of the properties in the project will be fully and comprehensively inspected by a qualified individual. And that qualified individual must certify that all hazardous or uninhabitable conditions will be corrected at project completion. And that individual must also certify that all major systems will have a reasonable or 5 years remaining useful life at project completion. For this technique, no documentation is required at application, but if you're committing to these 10 points, then you have to complete what we call a owner-occupied sponsor and homeowner certification form at project completion that basically certifies that what you said you were going to do, you did. So for those projects that cannot commit to that level of rehabilitation or percentage of units that will undergo that level, you may be eligible for 5 points. So if you're going to do any type of, accessibility or anything like that, you could still be eligible for the 5 points. So again, no documentation is required up front, but we will request it later on. So as with all scoring techniques that are selected in the AHP application, the project is committing to what's described in that technique. So should the project be awarded points and you got funding and you fail to adhere to that scoring category where those points were awarded, or if you just don't provide correct documentation, you may be at risk of that we could reduce the subsidy or even recapture dispersed funds. It doesn't happen often, but again, it's a serious situation that we want to be upfront about and saying that how critical documentation is to us. So before I talk about the feasibility review of the applications, I want to just talk about another case study. So this case study is for a project called Silver Anniversary Scattered Sites, and it was located in Pendleton County, West Virginia. This project was awarded in 2014, and it was sponsored by Almost Heaven Habitat for Humanity, and a member applicant was Pendleton Community Bank. This project built 3 new energy-efficient houses for very low-income families. From a scoring perspective, this project was able to score very well in our community stability category. They met the criteria for donation. They had several empowerment techniques for the homeowners. They provided housing for the homeless. They were located in a rural area. They provided 2 out of 3 units for individuals with special needs, and it was also a project that was sponsored by a nonprofit. The project also received a high targeting score. So because this project claimed these points, they also provided the correct supporting documentation. They were able to score high enough, pass our feasibility standards, and were awarded a $110,000 AHP grant. So as you now know, the applications are scored. We then rank them by the score from highest to lowest based on the claim that they made and if the documentation was sufficient to justify that claim. So now what we do is we complete a feasibility review on those applications that are considered in the competitive range, and we really determine that range based on the amount of funding we have available versus the amount of funding that's being requested. So the point here is that even if your project scores well and it's in the competitive range, if you don't pass feasibility, it won't be awarded funding. So as you're developing applications, we stress to not become so focused on scoring that you're overlooking pertinent feasibility standards. And it does happen. We do have projects that don't pass feasibility and therefore don't get funding. I'll cover some of the primary feasibility factors outlined in the red box in today's presentation, but our implementation plan lists many more guidelines that you'll need to know. And it's important to know that if your application scores high enough at this stage, we'll likely be talking with you in more detail about your project. And at this stage, that additional information may be requested of you to determine the project's feasibility. So it's really important that sponsors are timely in submitting that documentation to us when it's requested so we can make sure we're doing an adequate job of reviewing your application. One of the primary focuses of the feasibility review is to determine the project's need for the AHP subsidy requested, as well as its overall viability. The primary documentation we use to make these determinations are the project's financial statements. So on this slide, I've listed the financial documentation that's required and whether or not it's required of either an owner-occupied or a rental project or both. All of the forms are contained in the financial feasibility spreadsheets, which are they'll be available on our website at the end of March or maybe a little bit after, but they will be available well before the June 6th date. But there are separate spreadsheets and templates for rental and owner-occupied projects. So make sure that they take a while to complete, so you'll definitely want to work on those before the round opens June 6th. It's really important when completing these spreadsheets to type directly into the spreadsheet. We've had people try to copy and paste and alter spreadsheets, but there are so many hidden formulas and rules that when that happens, it doesn't upload to our system correctly. So we've had to kind of let people know, hey, the spreadsheet's broken, you have to go back, you have to retype everything and do it all over again. So just try to save yourself some time and type directly into them. Make sure you read the instructions tab on those spreadsheets. That really helps you key in the information. Generally, when we make that determination of subsidy need for both rental and owner-occupied projects, we review your sources and uses, and that will basically verify the funding gap for the project and the need for the amount of funding requested. In addition, for homeownership projects, we consider the gap in the proposed financing based on different categories of home buyers proposed, looking at their projected incomes and how much the selling price of the units will be. In those cases where sponsor financing is proposed for owner-occupied projects, there's a sponsor financing worksheet that will be reviewed to verify the present value of financing and how it relates to the project's financing gap. Now for rental projects, in addition to the sources and uses of the proposed capital improvements, we will review the projected operating revenues and expenses to determine that the resulting cash flow is adequate but not excessive to the extent that it could support debt in lieu of AHP. At the same time, we'll be looking at operating cash flow as an indicator of long-term viability over the 15-year compliance term for AHP. So be aware there are certain limits on cash flow. We take into account other factors like soft debt or permanent financing, but you'll want to make sure you read the implementation plan for specific limits related to debt coverage and cash flow. There are some things we'll be looking at to determine if the AHP subsidy and project viability, and consequently some of the things you should be considering as you're developing your applications, but there's a lot more in the implementation plan, so make sure you review it. So in addition, the cost reasonableness of a project is something we take a look at very closely. We use a couple different approaches based on the type of project you're submitting. So again, I'm harping on the implementation plan, but make sure you review it to see which guideline we will use based on your project type. So we make cost reasonableness determinations based on different project types in different ways. So we may use the Marshall-Swift analysis, which is a cost estimator tool. Projects are limited to 10% over the Marshall-Swift analysis with a justifiable cause. We also may compare your project to local usual customary costs. Several times in different project scenarios, you will have to be validating your costs by a third party or commit to using a bidding process. And rental projects, you must also submit a form completed by a third party that reviews project costs. So again, the implementation plan will say, based on owner-occupied, based on rental, these are the feasibility criteria we're looking for, specifically related to cost reasonableness as well. We anticipate that funding will be announced on December 14th of this year, and if you're fortunate enough to get an AHP award, the post-award phase of the process begins immediately, and that's what I want to talk about next. So upon the award, you will have entered into a long-term relationship with us, 15 years for rental projects and 5 for owner-occupied. It's important that in your decision-making about participating in AHP, you consider what will be expected of you in this post-award phase of that process, so there really shouldn't be any surprises. This slide and the next one, we provide a glimpse of the major expectations and the respective roles that are played by the member and by the sponsor in that post-award period. So I'm not going to go over these individually. You can review the details of each in our implementation plan attachment D. There's also other guides, references, and even webinars on our webpage. So on this next slide, I just want to highlight the compliance review upon completion, which happens, as the name implies, when you complete your project. And it, in essence, will confirm that you delivered on all of the things that you said you'll do in your application. So you hit all of your scoring and you still are considered feasible and meeting our guidelines. Documentation and communication is absolutely key to a successful post-award relationship. So again, throughout that 15-year rental, 5-year homeownership, we'll be requesting documentation for you on income, tenant rent paid, if applicable, and other key components related to scoring. This can be on a relatively consistent basis between every 2 and 6 years, depending on your project. So we can't stress enough the importance of documentation for your project, as we know 15 years can be considered a long time. Staff may change, but the project is still expected and required to comply with the AHP regulation. Again, we do have a disbursement and monitoring recorded webinar available on our website. You can go and take a look at it. We think will be really helpful for you as well. So just want to spend a couple minutes talking about recommended next steps. You now understand AHP, you have a better feeling for it. Now what do you do? So most of these recommendations, again, I've already discussed, but I think it's important that we emphasize things like using our webpage as a resource. We have a brand new webpage. We tried to organize the information better for you so it's easier to find everything, but there's a lot of resources. At the end of March, a majority of our forms, templates, and guides will all be available to you to take a look at what's new and required this year. Make sure you're developing a relationship with your member. So if you're a sponsor, find a member. If you don't have a member, we can help that. We have what we call a member-sponsor match service. So say you're a sponsor, you really want to use AHP, you don't know what member to go for to work with, and vice versa. There's a form online that you can request a match. We can't guarantee a match, but we can help try to facilitate it and make those introductions for you. To give you an overall perspective of the AHP process, here's a kind of a summary timeline for 2017. Again, I mentioned earlier we'll have that AHP 101 webinar that is geared more to project sponsors, and it'll go into a lot of detail in the application input, documentation requirements, and relate to scoring and feasibility. That webinar will be available on our website on April 12th. It's a longer one, so you could hunker down and really get to know the details of AHP. The AHP round will open on June 6th. So this is the date when sponsors can access the AHP online application and start completing your inputs and attaching your documents. We will provide project-specific technical assistance up until July 28th. After that, we only answer questions related to the system, lockouts, upload issues, and so forth. So if you have a question, July 28th will be here before you know it. Make sure you get it to us before that date. The funding round closes on August 10th. All applications must be in the member-approved status by 5 p.m. on that date in order to be considered. And again, we anticipate making the AHP Award announcements on December 14th. So as we're wrapping up, I'd like to talk about two of our community investment products that really do have an opportunity to go hand in hand with an AHP project you may be working on. So our Community Lending Program, or CLP, is a $1 billion revolving pool of specially priced funding available to our members to lend to qualified projects supporting housing and economic development. So since CLP loans can only be made to a member, we realize CLP can't necessarily work for every project. But if your project needs financing, consider asking a member about a CLP loan. Any project that meets AHP targeting, which is a requirement, will also qualify for CLP. CLP offers flexible fixed-rate financing up to 30 years. Plus, the CLP loan fund is always open. The approval process is quick and there's no monitoring. So to apply for CLP, your project must first qualify for that member financing. Then the member would submit an application to the Federal Home Loan Bank on your behalf. And moving forward, the CLP loan can allow for the member to extend a longer term by mitigating their interest rate risk. So to learn more about CLP, you'll want to talk to Kate Swanson here at the bank, and her information is listed on that slide. For those projects that are providing for-sale housing, with our other community investment product, First Front Door, the bank will match the eligible homebuyer's contribution 3-to-1. So this is a program that is exclusive for first-time homebuyers. For every $1 of contribution the homebuyer makes, the bank will provide $3 in grant assistance up to a maximum of $5,000. So depending upon your project, you can use AHP and FFD together. So you'll want to visit www.firstfrontdoor.com to learn more about this product. And that actually just opened this year on Wednesday, so we are accepting reservations for that funding. The community investment contacts related to AHP are listed here on this slide. You may contact any of us to answer any detailed questions you have about AHP, and email really is the best and fastest way that we can respond to your inquiry. So I want to thank you for taking your Friday lunch to listen about AHP, and if we have any questions at this time, I'd be happy to. There is a question. When we say, what do you mean by a retention agreement? Retention agreement can be in different forms. So it could be through a mortgage, a deed restriction, a deed of trust, a leasehold mortgage. So it is basically a document that is completed by the member. We have specific language based on rental or owner-occupied that has to live within that document. And then that is what is tied, to the AHP funds. So that is a document between the sponsor, if it's a rental project, and the member bank, or the member bank and the home buyer or the homeowner. We help facilitate that process along the way, but that's a lot of involvement more on the member's end. It must be executed and recorded as well. So there is another question I see here. Can the funds? I'm sorry?
No, go ahead. Sorry.
Okay, that's great. Can the funds be used for infrastructure needs for a project? It can vary. Funds should be used for new construction and for rehabilitation costs. So we would need to look into what type of infrastructure you're talking about for the project. Can you just repave a road near the house? No. So we would need to take a look at that. If you have a specific question or a scenario that you're considering, I would say send me an email, and then we can talk about it further. There's another. Go ahead.
So it's from David Hunter. Early in the presentation, I believe you mentioned 80% AMI as an eligibility threshold, but the PowerPoint showed 50% AMI. Can you confirm or verify?
Sure. So yes. So what it is that eligible households can be at 80% of the area median income. But I think what slide we're referring to is also the rental projects you must at least reserve 20% of your units for incomes at or below 50%. So for any rental projects, 20% of your units have to have 50% or less, but those other 80% can be anywhere up to 80. So AHP funds cannot be used for any household over 80%. They just aren't eligible. So that's where that split, sorry if that was confusing, but hopefully that cleared things up.
Thanks, Megan. If other folks want to ask a question, you can unmute your phone by doing *7. It's great to hear about resources. We've had some hard days this week, so it's great to hear what the bank's doing. Anybody? Again, it's *7 to ask a question.
Hi, good afternoon. I have a question.
Yeah, tell us your name.
This is James Scott. I'm here in the Harrisburg area.
Mm-hmm.
And I registered for the webinar through the Housing Alliance. However, I was not able to view it. Will you guys have that available for future viewings?
Yeah, I've actually recorded it, and we'll send out the PowerPoint presentation after, so you'll have the contact info, and you can listen to it again.
Thank you
we'll
very
send
much.
that out later today or first thing Monday.
Okay, sounds great.
Anybody else have a question or a comment? Again, it's *7. Well, I wish everyone a good rest of the day and a great weekend, and thank you so much to Megan and the Federal Home Loan Bank of Pittsburgh for partnering with us on these very important issues. Thank you.
Thanks, everybody.
Thank you.